Industrial real estate is what we do. It is largely out of our eyes. It's big. It's like being a high school offensive lineman. Really only your mother and your girlfriend know. And we love it. Industrial market in Houston is extremely healthy. And I'm gonna go to CB. I do have a lot of HFF credit for Jimmy. And I'm gonna kind of blow through the market dynamics fairly quickly. Year over year, this time last year, we were at about 5.3, 5.4% vacant. We've dropped 6 to 7 to 4.7, a very strong 4.7. Absorption's gonna hit 8.5 to 9 million feet. Construction is going down rapidly. In the 9.3, 9.4 million feet we have in 2015, Dakin occupies about 4 million feet, owner occupied. So when you strip that out, new development in 2016 is gonna fall quickly. Completions are down and rents are stable. I would say that they are going to go up. Houston's industrial market has been, since 2002, 2003, has just gotten stronger. The deals have gotten bigger. A 200, 300,000 foot requirement is commonplace. 10, 15 years ago, that was Dallas. The Dallas-Fort Worth area saw the big deals. We just wrapped up a 600,000 square foot project. I could have done that project 10 times with demand. So Houston is in a wonderful spot, and I don't see in 2016, 2017, anything materially changing. Had a lot of great leases. The deal size has gone down a little bit. We've got several 400,000 square foot deals that are in negotiation right now. I don't know that they will hit in 2015. I think one of them will. But 2016, demand and transactions that are in lease negotiations or in negotiations to do a design build are strong. So this is about 2.6, 2.7 million feet of decent sized deals. 2 or 3 are renewals. The big driver, and Jimmy talked about it, in petrochemical expansion of plus or minus $90 billion. The Panama Canal is about to blow up. The Port of Houston and the Eastern Seaboard, we're almost finished. I'm not going to get into, everybody can Google this real quick, but this is fascinating, they are doing an online auction in the morning to get through the canal to the ships. I think that's about finished, and I'm not sure how it works. A friend of mine that owns a shipping company was sharing this with me. He thinks his ship pilots like it, but in the end, I think it does cost. Panama Canal to Houston. Houston will not be the deep water, namely because of our bridges and so forth, and the distance to get from the Gulf in. Even with that, we saw a 26% increase year over year. I think that number will remain going forward with petrochemical feedstock, so forth, heading to the plastic pellets heading to South America, is just making Houston, Jimmy talked about it, the growth in Southeast is not slowing anytime soon. 2015, from an investment standpoint, and this is from Trent Agnew and Rusty Tamlin, good friends. Blackstone sold in early 2015, $8.1 billion. That in industrial real estate, it's only 2 of his office buildings, but industrial real estate at $80 to $100 a foot, it's a lot of buildings. The next one is KTR. KTR, good friends of ours out of New York, sold to Prologis. This is the second time they've done it in this platform. The reason KTR sold was they were predominantly B-class, lower end, value add. If they invested $1, they wanted $3 back. That was over. I think they had they'd gone up against so many obstacles that prevented them from continuing that multiple. And then most recently, our good friends at Industrial Income Trust, now badged under Industrial Property Trust, $4.5 billion, 58 million feet, closed in November. That deal, if it would have been bigger, probably would have had more buyers. So very interesting. We sold several buildings into their first fund, Industrial Property Trust. So very well run. Houston transactions. Hines and KKR sold Pinto Business Park, HD Supply, Alpha. This is at Interstate 45, Beltway 8. Dynamite location. They've got plenty of land left. In 2016, I expect to hear more announcements of significant big box buildings in excess of 500,000 feet on those locations. I've also heard of about 500,000 square feet of spec in there. It'll go very quickly. Our company sold in 2015 just under 2 million feet, multiple markets, Houston, Dallas, Fort Worth, Austin, Omaha. Dakin, ABC Supply, Restoration Hardware. These were put in place in 2010, 2011. Cap rates, that's why we chose. Redeploy, buying land. ML Realty to Liberty Property Trust, Port Crossing, LaPorte. Again, Port of Houston, dynamite location. They've got about 130 acres to develop, combination of bulk warehouse and some flex space. Dakin's project in Waller. That's almost 100 acres under roof. Let that one soak in. That's huge. That right now, even with what's going on in the Inland Empire in Southern California, is the largest industrial project in the country. $420 million. Large project. Dakin is a tenant of ours, Northwest Houston. $100 as they move out. Class B, lower clear height, shorter truck courts. Again, we're not going to talk about densification, connectivity, people investments, or rapid obsolescence. These are words in industrial real estate that don't add up. And they had a lot of other words.
Yeah, I'm impressed you were listening.
I was writing. Exeter pulled to Centerpoint, Chicago-based group, Mayfield Properties, good friends, sold to Crow Holdings. Rusty and Trent probably would be able to share more detail, but that's higher yielding, older product, AEW, Greenfield, 1.5 million feet. Transaction volume in Houston is interesting. Not a lot of product sells. So if you go back and you talk about these things, it's significant over the last 10 years. Houston ownership doesn't sell, probably for the reasons that Jimmy discussed and Jonathan. It is a longer term. We've seen since 2002, 2003, a steady decline in vacancy. Cap rates. Houston is going to stay in that 5.5 range. For 2016, probably into 2017, regardless of what interest rates do. I don't think that's material. Southern California probably will go into the mid-4s. Just yesterday, 425 cap, Inland Empire. That is a big number. Their rents are all lower because they're underwriting to a much lower yield on cost, but warehouse pricing in the $120 a foot range. They will build bulk warehouse on $15 to $20 a foot land. That's remarkable. We're building on, $4 to $5 dirt. So, market dynamics. Capital in industrial real estate remains under allocated. I'll be in New York on Monday and Tuesday talking to different guys, probably less interesting than Jonathan, but it is lower risk. It's right in line with multifamily. Cap rates will remain, leasing activity and rental rates. I would say with new development, new speculative development, pausing, that we could actually see rental rates go up. In certain areas, we're looking at a project right now that our submarket's 100%, and our underwriting is under existing product. So I think that year-end momentum will continue into 2016. I think that the Port, Northwest Houston submarkets remain strong. Our only weakness right now is West. I think we are ahead of, in those developments, ahead of support things. Let's go back to maybe the services that you would expect for corporate America in sandwich shops, those kinds of things that are not as touchy-feely as mixed use. They're not there, other than a Dairy Queen and Katie. It will catch up, but I think we're a year or two away from that. So I think that market is soft, and I think it will take some concession to lease up. But Northwest, strong, and the Port of Houston, Southeast, extremely strong. So pretty bullish.